Alrighty, we're working on a 80-acre ridge here. Good dirt in the 90 CSR range, which is really good for our area. See here, it's working down really nice. Neighbor's having some work done there. It's working up beautifully. We are dry, very, very dry. This tool has the touch set monitor. Change it all right here after you enter in the basic parameters. There's a shot of the mulch finisher. This is a brand new 2330, 24 foot 9 inch, which is the smallest model made currently. We previously had a bigger one. Really couldn't pull it. This is the 8R 280 tractor. Now with the big tires on it, the 710s that were on the back of the 9R 440 are on the back of this tractor now. The back tires off of this one are on the back of the 9R 440. And of course we had to make the front ones correct, but same with the 440, had to change the fronts. I found a place that exchanges tires, so you basically have no cost. That way each tractor got set up for its appropriate job. We don't do a lot of mulch finishing, we don't do a lot of tillage. This machine will probably, just because we did some terrace work this spring, or last fall I mean, so we'll go into spring, smooth it up. We'll probably be looking at about 225 acres. So really, to have a bigger tool, what you're seeing right here for our operations, not needed. But when we do that 200 some acres, if you're going to cover 60 a day or whatever you're going to end up covering, or doing spot work, I want to be able to get done quick. I want a machine that's going to work well. And yes, a used mulch finisher would have worked fine. Problem is you get this new one for 80 grand. And I watched a used 2310, which is the model previous to this, which had a weaker frame. I watched one of those recently sell for over 50 on auction. It was Cleveland, but I just don't see a lot of savings in buying an older used machine. And some of those had notorious frame cracking problems. You can see this 2330, how big the frame is and the hitch and everything. So I think new is the way to go on this tool. We'll just plan on keeping it forever. I ordered it with every single option possible, so it really works well for our operation. Alrighty, we're making good progress on this ridge, looking down nice. There's some storm clouds moving in, but everything's moving to eastern Iowa. You guys will have to bear with me here. I'm losing my voice again. That's the second time this winter I've lost my voice. Just crap that comes home from the daycare. And the view from the other way. Now let's shift gears and talk about the markets. Today is the final day of March, which awaited in anticipation the USDA planting intentions report as well as the usage report. Beans skyrocketed after the report. Acres were down and there's just not as many beans left. Corn acres are up, although I don't think a lot of them will be planted because there's just so much snow in the northern areas of the United States. The other thing that the chart really doesn't compensate for, or their figures I should say, is if you have a field, and maybe it's canola, and you're going to replace it with corn, and doesn't that just mean that canola will go up because you just replaced the acres? It's not like new acres are being invented. In other market news, personal savings, money in your bank accounts, all that is dwindling. And credit card debt is on the rise, which tells me people are running out of money and shifting gears as to how they pay. However, consumer spending is still up. The Fed had this idea that with raised interest rates, and by the way, they raised them faster than just about any time in history. But as I mentioned in a previous video, they're not really that high in comparison to history. I mean, back in the 60s, 70s, interest rates were probably 7 to 9%. And you can Google and find those figures or watch the previous videos. It's just that Americans have gotten used to cheap money. The cheap money allowed people to do things they've never done before. You could buy cars that you really probably couldn't afford, because all people look at is the payment. They're not really going to go compare price of the vehicle. They're going to look and say, can I afford the vehicle? Cheap interest actually created wealth. I mean, you take a farm ground like this, and if you say, well, I can make the payment on so many dollars an acre, that's what the profit margin is over a certain year or a certain amount per year, and the ground will sell for a higher amount because less of that payment's interest. So we've created an artificial environment blowing bubbles. But this was done by design. I mean, this is how money is created, and I spoke about that in a previous video. Money is created by debt. So what we've created, it doesn't really surprise me. I mean, we spend more, print more. I mean, that was the idea of it, create more money. And we created cheap money and allowed things to flourish for a little while. The firecracker was already pretty jam full. And then when we had a wealth redistribution to the people during COVID, that was something we've never really seen before. It was directly to people who spent it, and it created wild inflation. And that wild inflation had to be tamed by the Fed. The Fed's idea was, if we jack interest rates, it'll make things high enough priced that people will just quit buying stuff, which will cause things to start coming down in price. So the Fed went on with their plan. What happened was they pushed it until breaking point, which the first thing to break was a couple of the banks. Now they're secretly and quietly printing money behind the scenes. They've printed probably 75-80% of what they tightened up on. So they're back to printing. Screw inflation, we got to print, because they know printing and living with the inflation is less likely to be massively damaging than it would be to just not. Now they came up with this program to bail these banks out, and that's what I mean by the printing. And that was all done over the weekend when the SVB bank crashed. And it's just like it's always happened in history. The first thing crashes is the banks, and the Fed bails their ass out. Meanwhile, the interest remains high, so people's savings and credit card debt's racking up. So the people are going to be without money here pretty soon. Meanwhile, the Fed's basically passing inflation or making inflation. So what I see happening is people are going to be without money. They're going to be broke. Inflation is added cost. You know, we're still living in inflation. We're not getting it back down to the 2% that the Fed claims that they'll get it to. It's just not going to happen. They're creating inflation through their printing. And let's face it, their own interest rates are another cost, because certain companies and things have to endure those interest rates, so they just pass it on to the consumer. So you take all these things that are happening, and what's going to lead to is people being broke, but inflation at the same time, which is what's called stagflation. Now this is an ag channel, so I look at agriculture only. So obviously it all ties together, but looking at agriculture only, that means inflation. So in other words, your prices of your commodities should be going up. There's a lot of other countries that are sick of the United States, or turning into an unstable country that prints monopoly money. It's a joke. They're getting tired of it, and there's a lot of countries stocking up on a lot of gold. So I think that gold could really go on up, and it won't be on the basis that there's speculation or inflation. It'll be on the basis that you might just not be able to get your hands on gold, actual gold. And the reason is because these other countries, these central banks, are going to be owning it. They're not going to be wanting to release it. Supply and demand. Now, anytime gold goes up, the dollar goes down. And gold is going up. I think it keeps ratcheting up. It trades all day long and 24 hours a day. But it does, I think, have like a 1 hour gap in the evening, I believe. If I remember right, it's like 6 p.m. Eastern Standard Time. It's the technical close of the market. So I think that every time it hits one of those, it hits that close, it's ratcheting up just a little bit at a time. And we've had $2,000 goal before, but I think if it goes above that, we could see new highs. And you can just take a paintbrush and paint a stroke with other commodities. So we're seeing oil come back up. It went down to 63. I see today it's up to like 76. So it's all coming back up. I think grain's on its way back up too. But obviously, these things are not just fundamentals. I mean, you got your. I had to stop the recording there a sec. I had a disc gang plug, just hit a berm with it. Plug. Brand new machine is starting to wear the paint off the discs. It's starting to free up, but brand new. It's really hard to turn the disc gangs. And I should check scraper tensions and stuff. Make sure they're actually adjusted properly. But it pulls a little easier all the time, just getting everything shined up a little bit so the dirt actually flows over it. You guys take a screenshot of the data points, the charts, and the little article I wrote up there on the previous part of this video. There was an interesting article about corn and markets and where they might go that basically says that we're down to the last seller in the world that has corn. I guess in 21, or right before the war in the Ukraine, 22, they had blocked sales of selling corn, so they weren't able to market anything. But since then, they reached a deal to release that corn. Now, bear in mind, I don't think a lot of the Ukraine got planted, so whatever they sold was stuff that was already in the bins from pre-war. But the reason we shot up so high was because they couldn't sell that. Then they did sell it, kind of flooded the market out temporarily. And like I say, now it'll kind of have a backlog to it. I just don't think they planted that much. Who really knows how much they planted? And probably one of the reasons even like John Deere's raising prices, this is my theory, is probably got a lot of tractors and shit over there that are up for repo, but nobody's going to get their HUD blown off going in there to get them. So I'm sure they'll take all that cost out on us. But anyway, that corn hit the market, and then we, of course, had harvest in South America. Argentina had a terrible crop, but Brazil had a good crop, so that corn hit the market. But now we're kind of down to the last corn out there that's available. Now, I believe our standard export's about 2.5 billion bushels, and I believe China alone's bought about 180 million. So 7% of that 2.5 billion. Now there's a safrina corn, if I'm pronouncing it right, that comes in about July, and you got to remember that just the southern states of the United States, that corn will be coming in late summer. So you're going to have new corn. So you basically have April, May, June, maybe even part of July till new corn starts hitting the market. But during that 3-4 month span, however long it takes to get the crop up and going, or if there is a crop. But during that time frame, there's a lot of buying that should take place from China. And their GDP is growing, and they're supposedly reopening, and they've had a lot of drought. And they've also, the shipping rates and stuff are down to where they can import corn cheaper than growing it themselves, at least according to that article. So that should be good for exports. I personally don't think we'll ever export the full 2.5 billion bushels, and I think they'll drag it out and buy just enough to get by until that new corn comes online, probably mainly from South America, because that's who China's buddying up with. But there is a good chance that you'll see some upswings to the market. I'm still predicting that you'll see $7 futures or more, and at the same time you'll probably see gold hit $2,500 just in the next few months. I can't confirm that, but it's just a hopeful, I guess. But you can put hope and dreams and all your data points that support those hope and dreams in your left hand, and you can put reality in your right hand. So if on paper you got a certain price that works for you, and you'd rather live in reality knowing that you got it and survived versus what you maybe could have got in your left hand. I'll probably personally go with the guaranteed survival over the hopes and dreams. I mean, we all have to take a shot now and again, and the people that do take chances at the right time or calculated chances are usually the ones that succeed, but the ones that go completely off of hopes and dreams and don't do a lot of data points investigating, they just jump at a whim when the market's high. I've seen them crash and burn as well. So it's a balance between making it or not making it. Earlier this year, at least local, we had the opportunity to sell 2023 raised crop in 2024 for about $5.98. Now I think it was $5.96 cash. Man, if it hits like $6.25, I'm gonna sell a bunch. And it did not hit. Now fertilizer, everything's fallen since, so obviously you can take a little bit less for your crop, but I really feel like you need to be in that $6 range. I'm still hopeful that we go see above $7 for next year as well. I think it's greatly going to depend on our weather. Now, if you have a big crop and these USDA numbers prove accurate, then be prepared for the $5.50 cash range if you're in western Iowa. Now we have a positive basis as of the moment just because they don't really have enough corn. So there's just a lot of variables between now and next year, but I really think at some point there should be at least a little higher market for next year. I just don't know how high. Beans seem to be in that $13 to $15 range going into that same time period for next year. But if you stick with the old-fashioned 2-to-1 ratio, and that puts corn in the fives. So we'll see how that materializes. But any opportunity a guy can get to make it, all the better. I'm solely focused on paying off debts while I have the ability to. And I also firmly believe that what the Fed is doing is printing which will offset the, they call it a pivot, where they go from quantitative tightening to quantitative easing. I think they've already pivoted. They're just doing it quietly. I think we're also going to run into stagflation for the reasons I just described. I really don't see rates coming down right away, but a lot of the guys online said they're going to come down by 2024. I don't know there either. And they may say, screw it, start dropping rates, which will stop a recession. And as far as a recession will actually lower commodity price. But on the back slope of that, once everything goes to completely shit, the economy's ruined, and certain people have lost their businesses, then the Fed goes nuts in printing, which will probably cause inflation. And the bigger these bubbles burst, the bigger the next bubble has to be to correct it, which is why we're slowly developing closer and closer patterns that are more catastrophic to one to the next. Additionally, I did want to throw a little blip out there. There was a chart there in those still frames of this video. The chart was an average of a certain amount of states, certain amount of land, certain amount of farmer interviews as to what their percent margins were. And then lines strike through. You can see during the Trump tariff era that we were at net zero. No, there's no profit at all. And 6.9%, I believe, was the baseline throughout all the years, which that's terrible. I mean, most commodities producers are 10% at the minimum. And that's what I've been talking about before, is what these people or these companies will pay. Well, we only made 10%. Yeah, but you also paid your CEO $12.5 million for the year, plus all your board of directors and all your staff got above average wages. A farmer, he doesn't even hit wages at all, and he's still making 6.9%. So it's a pretty piss poor living standard. But this one may be our one modern time to shine. And for this farmer telling the story, I'm going to try to capitalize on it the best I can. Whether that means doing anything else or just trying to put myself in a better situation. But my goal is pay off debt, and then you got more money for more fertility and other things that you can do on your farm, which will give you extra income going forward. So you don't have the debt and you got the extra income, or and you have even more income, you could really start to flourish at that point. But it's kind of like getting ahead of that 8 ball. And you have to balance your budgets and make your books work and line up your columns as to what expense goes out of this one, goes into this one, or vice versa, until you get to that point. And then you get a few dry years in the mix where you have a short crop, and maybe that helps prices as a nationwide overall, but maybe you're one of the guys that really took the hit to make those prices. And that's things you just kind of got to prepare for. You just kind of want to base it off of crop insurance averages. And I fully understand you got to take chances and you got to do things, but at the same time you got to calculate the risk and be prepared for it too. That's been the most successful farms that combine a series of calculated risk and then taking chances at the same time. The guys that never took a chance, they fade away, and the guys that took too many end up also fading away. As far as the USDA report, boy, that's market manipulation. Let's make sure we come out with big numbers, which surprisingly was bullish, but really in a lot of ways is kind of bearish on at least the corn numbers, in my opinion. And that way we could keep the price knocked down. It'll give traders a chance to bump back up. Here comes new crop corn. It really just controls prices. And the USDA is not for the farmer. They're against us, and they use market manipulation to achieve that. And as to where they got those numbers, I don't freaking know. Hell, what they do, call everybody? Because most of those guys, most farmers take the USDA surveys, they wipe their ass with it and throw it in the trash. So I don't know where the hell they got the numbers. I mean, if that's the case, they're just guessing that anybody can make anything. Hell, why not be 300 million acres of corn? I mean, it just, and that's an exaggeration because obviously there'd be fact checking. There isn't that many tillable acres, but when you're just going to pull numbers out of a hat, though, it becomes a lot easier to fudge shit. So again, that's why it's not really a report. It's a market manipulator. Anyway, that's my thoughts on it for the time being. Hopefully some of the information was useful to a few of you guys. I know the subscriber count went up a little bit. I just try to stick to the data points and put together what I think will happen. As far as our farm, we are going to gear up here. I'm hoping to plant like the 9th through the 15th maybe on corn. I did not expect to go that early. I really didn't. I figured it'd be cold and shitty, and that could change because this weather's so screwed up. But maybe that will hold true, and maybe we'll be out here early this year and really knock it out quick. I don't know. The 8-year-old planter, I still got a little bit of work to do on that. And if we're going to go that early, and I just can't seem to get them to give me the last parts. It's just I'm calling every couple days, and last parts are just not showing up. So I mean, I guess if it doesn't go and we got plenty of time, the idea was just to speed up spring, but maybe we're gonna just have that naturally and not run the machine. I don't know. I really want to run it, but we will see. It's been agonizingly frustrating to do anything equipment wise. You can't get things. Things are behind, overpriced, interest rates fuck you. All roads lead to the same outcome, really. And it's just kind of paralyzing things. And I really don't see this supply chain crap returning to quote-unquote normal for a long time, actually. Anybody successful will tell you it's all about timing, especially in real estate. So buying ground, that's real estate. If you have grain in the bins, like we do, I think you're going to see some spring markets here, but be on point. I don't really have an exact price for you, so it's coming up. It did come up on Friday here, so watch it. Take advantage if you can or want to. We got a long ways to go till this crop's in the bin, so watch the markets. I wouldn't pre-book anything right now. Farming's a tough game, even worse when you don't know a lot of the things that I try to put out there on the videos. That's why I'm trying to help people. These are things I've had to learn, and for years I sat around with the idea of a cash basis sales and stuff and wondered why the market was doing what it was doing. And I educated myself, made myself aware, understood market fundamentals, global economies. Anyway, thanks for watching. If you guys like market information, appreciate you sticking around. Just gonna stay doing this for a few more days actually, and got dozer work to do and all sorts of stuff to do. Trying to get ready to plant, and I feel fine, but my voice is sure giving out, so I'm going to conclude this video.